We open up with a cut-off closure around 30 points approximately.
The policy repo rate unchanged at 6%, 6.5%.
The bank Nifty is still very much trading below its 50 DMA. It's been weak.
So Nifty, that is down 86 points as we speak.
It's been a down day, right? At any point of time today, after the RBI governor spoke and he raised the red flag on inflation, the markets have been trading in the red.
We started the last hour at around 19,550. We swung a little bit, 20 points either which direction, but otherwise we're ending pat at that number.
But it was an eventful day for the markets where the RBI governor chose not to change any rates, but hawkish commentary led the markets lower, and as a result of which there was a near 350-point cut on the Nifty bank, and the Nifty itself was lower by almost 100 points. It's Markets Today, the show where we talk about 6 hours of trade in 5 headlines. Let's talk about those headlines itself. Financial stocks tumble after the Reserve Bank moves to drain liquidity by 1 lakh crore rupees, asks banks to maintain an incremental cash reserve ratio of 10%. Sensex declines over 300 points. The rupee gains some strength. The 10-year bond yields soften in trade. The Monetary Policy Committee delivers yet another hawkish status quo policy. The Reserve Bank raises the inflation forecast even as it expects the recent spike in prices to be short-lived. Retains the GDP forecast for the fiscal at 6.5%. The NCLT, or the National Company Law Tribunal, approves Zee Entertainment's merger with Sony India, dismisses all objections in the case. Sony will indirectly hold more than 50% stake in the merged entity. Shares of Zee Entertainment hit upper circuit in today's trading session, ending nearly 17% higher. Axis Bank plans to raise its stake in Max Life to by 6% to over 19% via a 1,600 crore rupee preferential issue at a steep premium to its earlier purchase. It may also acquire another near 1% from Max Financial. The move lifts Max Financial stock. Axis declines. Tata Power rallies 1% on an overall yearly improvement in their first quarter. Bata corrects about 3% after their top line shows no growth. Margins contract as well, but Pidilite slips despite a strong performance in the first quarter. Let's talk about the markets itself. Then we did see some outperformance coming into the mid-cap end of things, but that's the only straw for the bulls to clutch on to. In fact, it was the financials which were lower. The RBI's commentary post-policy, the commentary of taking liquidity off the table led to a sharp fall in the markets. Nifty and the Sensex ended with cuts of over 0.5%, but the financials, they took it on the chin. The Nifty bank broke below the 50-day moving average, saw cuts of over 1%, almost close to 0.75%, except for IndusInd Bank and SBI. All banks actually closed the session lower. The mid-caps, like I said, fared slightly better than the blue chips, largely because they ended flat with a slightly negative bias. We have Surbhi Upadhyay joining in with a wrap on what took place on D Street today. Surbhi.
Well, a down day as the market had to digest what is being described as that hawkish pause from the Reserve Bank of India. And today was all about undoing a lot of the dramatic last 1 hour rally that we were speaking about yesterday on Wednesday. The Nifty finally ended with a cut of about 0.5%. But the good thing with the bulls is that the index managed to recover from the lowest point of the day. A lot of the selling was concentrated on the bank side of the market. And that's because of the hawkish pause, as I said. It's very clear that the RBI is sticking to bringing inflation down to its 4% tolerance level, and that was reiterated by the governor in the press conference today as well. Also, this incremental cash reserve ratio of 10% on deposits, that became a bit of an excuse for traders to go out there and book more money out of bank stocks, and therefore that index was under pressure. In fact, at one point, the bank Nifty was falling all the way to 44,400 thereabouts, but then there was a recovery to some extent, though the index is still well below the 50 DMA. There was, on the buying side, there was some interesting buying on the Adani group of stocks, Adani Enterprises, Adani Ports. Reliance was a bit of a support. So that's how the market managed to pull back from the lows of the session. Speaking of Reliance, actually, oil and gas stocks were in the green throughout. That's because crude oil prices are now hitting 87 on Brent. So BPCL, ONGC, these were stocks that were up and about. The stock of the day really has to be what else but Zee Entertainment. Finally, the merger has been approved by the NCLT, and we saw 16% rally on Zee on the back of that. Interesting result reactions today, and more down than up. Barring Varroc Engineering, which was very positive, double-digit gains there, Granules, Bata, Pidilite, a lot of these stocks have had actually negative result reactions, weak earnings coming in. And finally, CMS Infosystems, where the promoters have sold out almost 20% of the equity. At least that's the market's anticipation at this point in time. Big block trade happening over there. We come back tomorrow and we'll have the inflation print from the US, and that will really set the tone for what lies ahead from the global standpoint. So really, it is macro talk and central bank talk and inflation that's dominating the market's mind for now.
Surabhi, thanks a lot for that. Let's get you some market opinion coming in from Mahesh Patil of Aditya Birla Sun Life.
Overall earnings season which has come in, though has been a kind of a mixed bag, but overall I think earnings growth still remains fairly intact. We are still seeing this year nifty earnings growth to be around in the mid-teens or so, which is very good. And overall India's outlook in terms of GDP growth also remains very strong. I think at the global front, I think you could see some kind of hiccups, and in that context, I think you could see some consolidation or possibly some mild correction in the markets. If you look at the banking sector, the largest sector which is there, so there we have seen some amount of margin pressure. I think in a few banks, slightly disappointed on the net interest margins, and I think that especially some of the large PSU banks, okay, where you were expecting that the fall will be much lower. So I think that is where I think you could see some kind of a slowdown, not exactly a slowdown, but some downgrades to earnings growth in this fiscal year.
All right, with that, let's move on to the second headline. The Monetary Policy Committee announced a status quo policy for the third time in a row. This was expected, but what wasn't was that it was a hawkish pause from the central bank as it remained cautious on inflation because of the recent increase in vegetable prices. The Monetary Policy unanimously decided to keep the repo rate unchanged at 6.5%. The RBI revised the inflation forecast for the current fiscal to 5.4%. This is a good 30 basis points higher from the earlier guidance of 5.1%, and this on the back of surging vegetable prices. Inflation in the second quarter is expected to actually cross 6%, go to 6.2%, breaching the central bank's tolerance band of 2 to 6% itself.
The recent spike in CPI inflation is expected to be short-lived, going by past trends. In such situations, we need to remain watchful and not resort to any knee-jerk reactions. Now, if these spikes, these idiosyncrasies in CPI inflation, particularly food inflation in particular, shows signs of getting generalized, then we may have to act.
And the RBI has also announced an additional cash reserve ratio of 10% on all the incremental deposits that the banks got from May 19 to July 28 to neutralize the extra liquidity created by the return of 2,000 rupee notes. This move is expected to help absorb about 1 lakh crores of excess liquidity. Lata Venkatesh joins in with the details of that one. Lata, what exactly does this mean for the banks?
Okay, well, any CRR is actually a negative for banks because they raise the money at 8%, 7.5%, but 4.5% cannot be lent. Now, there is an increase of 10% of the extra deposits cannot be lent. Now, just look at the amount of deposits. On May 19th, the day the 2,000 rupee removal was announced, the total deposits in the system was 183 lakh crore. And on July 28, it works out to around 194.9 lakh crore. So this extra 11 lakh crore is very unusual. Deposits don't grow so much in 2 months. Okay, clearly it is because of the return of the 2,000 rupee notes, which was mandatory and one-off. Now, apparently 3.14 lakh crore has been returned. 88% came as deposits. The remaining 12% people took back money in other notes. Now, deposits grew, therefore 88% of 3.14 would be 2.76 lakh crore. Why did the remaining 11 lakh crore rise? A large part of it is because the HDFC merger happened with HDFC Bank, which brought a large book of about 6 lakh crore into the system. And that explains why there is an increase. So the point is 10% of that 11 lakh crore that has to be absorbed would increase by, would mean a removal of about 1.1. The governor admitted it's a little more than 1 lakh crore. that banks have to keep idle and not lend. They've just keep it idle with the Reserve Bank. It is only for 2 months. It will impact margins, but it is going to impact one bank's margins a little more, and that's HDFC.
With regard to incremental CRR, this was considered necessary in the background of the liquidity overhang. It's desirable, we considered it desirable in the interest of price stability and financial stability. It will have an impact on the inflation situation also. And as I said, it's a purely temporary measure and it will be reviewed on 8th September or earlier.
All right, and let's talk about the big corporate story then today. The National Company Law Tribunal has finally approved the merger deal between Zee Entertainment and Sony. The merger, which was announced way back in December 2021, was delayed due to a slew of legal and regulatory hurdles. Following the approval, the stock of the Zee Entertainment company went up by nearly 16%, actually ended about 17% higher. Yash joins in with all the details of that one. Yash.
Well, certainly a big positive coming in for Zee Entertainment from the National Company Law Tribunal or NCLT. The NCLT, which had reserved its order in the matter of Zee Entertainment and Sony merger just about a month ago, today, while passing its order, has approved the merger scheme between the two companies. Importantly, NCLT also said that they dismiss all the objections which were raised by the dissenting parties as far as the hearing of this particular matter is concerned. Of course, we've spoken about the dissenting parties in this particular case. There are various creditors like Axis Finance, JC Flower, ARC, IDBI Bank, IMAX Corp, IDBI Trusteeship, which had raised their objections when it comes to the merger scheme or the amalgamation scheme between Zee Entertainment and Sony. Particularly, the dissent was around the non-compete clause under the agreement, of the merger between Zee Entertainment and Sony. So that has been set aside. Also, exchanges had expressed certain reservations. They had said that SEBI has passed an order against the promoters of Zee Entertainment, of course, Subhash Chandra as well as Puneet Goenka, and that SEBI order bars Puneet Goenka from taking any directorship position in a listed entity. That also has been dismissed by NCLT. Now, there are two important things which one has to look out for going forward. The first one will be the SEBI order against Zee Entertainment, and does that come in favor of Puneet Goenka or not? Because if it does, then Puneet Goenka can continue as the managing director of the merged entity, otherwise not. The second one is whether the dissenting parties at NCLT challenge the dismissal of their objections before a higher tribunal, that would be NCLT. So these would be the two important ones, but big positive in terms of approval for the merger between Zee Entertainment and Sony. All right, Yash, thanks a lot for that. Big positive, but all eyes on what, the order on Puneet Goenka's leadership is going ahead. But Surbhi Sutaria also joins in with a breakup of the numbers, the shareholding pattern, and how the valuations stack up. Surbhi, tell us more.
Thanks so much for that. So the long-awaited approval has now come in. NCLT has now approved the Zee-Sony merger. Now this merger was originally announced in December of 2021. And then, back then it was decided that Zee shareholders would get 85 shares of the merged entity for every 100 shares held in the company. Now, post the merger, Sony Group will hold around 50.86% shares in the merged company. The Zee promoters will be entitled to 3.9% stake, and the remaining 45% stake will be held with the public. IIFL has written on Zee Entertainment. They had said that they raised their EBITDA targets by 2 to 6% and arrive at a target price of 252 rupees. They estimate Z5 losses to be in the range of 900 to 1,000 crores for the next 2 years. And considering the sharp downgrades in the past 6 months, they say the Z is trading at 1 year forward of 24 times and it is still not cheap. That also penciled in a scenario of if the merger goes through, their target price would be 297 rupees, in which they are ascribing 15 times PE multiple to the broadcasting business and close to 4 times price to sales multiple to their OTT business. So, post the merged entity, the target price of analysts is somewhere close to the 300 rupees mark.
All right, Surbhi, thanks a lot for that. Let's talk about some other stock-specific news as well. Suzlon Energy, again, nearly 5% in today's trading session. This is as the company has launched a QIP issue to raise about 2,000 odd crore rupees. Sources say the issue received bids worth nearly 4,600 crores, nearly 2.5 times of what they were seeking, and 80% of the demand came in from long-term funds itself. Vivek joins in. Vivek, What is it that you're picking up?
Well, Suzlon was the stock in focus. Remember, the company last evening went ahead and said that it is looking to garner close to 2,000 crore via the QIP route. Now, out of this 2,000 crore, 1,500 crore was the base size of the issue, and another 500 crore was actually the green shoe option or the oversubscription option that the company could have garnered in case the subscription demand was quite good. We also understand from our sources that the indicative issue size for the QIP was at 17.55 rupees a share, and the dilution at 2,000 crore rupees, that is, if the company decided to go ahead and exercise the oversubscription option, the dilution of the current pre-existing equity share capital would be 9.15%. We also understand that the proceeds of this particular QIP would be utilized for debt repayment as well as general corporate purposes. Today morning, we also reported from our sources that the Suzlon QIP was closed. It got a significantly large demand. In fact, we understand from our sources that the QIP got a demand of almost 4,600 crore for the 2,000 crore that the company was going to look ahead and garner raising. So 80% of demand for the Suzlon QIP, in fact, is from long-only funds. So an interesting development, and this particular stock, was one of the top buzzers in today's trading session.
Top buzzers indeed. Thanks a lot, Vivek, for that. We'll take a short break, come back, tell you more about all the other headlines that we've been tracking. We've been speaking about the markets, the RBI policies, Zee, and a couple of other stocks which were in focus as well. But let's talk about another one which hit a fresh 52-week high today in an otherwise wobbly market. That was Max Financial, after Axis Bank announced the fact that it will acquire 6% stake in the company at a steep premium to its previous deal itself. Yash joins in with the details of the same. Yash.
Well, Mangalam, the long-awaited transaction in Max Life finally came through. Axis Bank informed the exchanges that they would be acquiring additional 6% stake in Max Life Insurance, and this would be done against an infusion of 1,600 crore rupees into the company. The transaction would happen through a preferential allotment at a price of 113 rupees per share. As far as the deal timeline is concerned, Axis Bank informed that they expect this deal to conclude in the next 4 to 6 months. The reason why it becomes a bigger positive for the stock, especially for Max Financial Services, which is the parent company, is that, understand this thing, Axis entities already owned about 12.99% stake in Max Life, and that transaction happened at 32 rupees per share. This balance 6% stake which Axis entities would be acquiring would happen at 113 rupees per share. So, of course, the steep premium that you spoke about, this is the big number that will come through for Max Life Insurance. Apart from this, there are various other positives which also the deal would bring to Max Life. The first one would be the post-capital infusion. The solvency margin for the company would go up by about 39%. Also, the company will get growth capital for the next 18 to 20 months. And this is exactly why the stock was pretty excited in trade today.
All right, Yash, thanks a lot for that. On the obverse side, we had Axis falling about 1% itself. The fifth headline today, Tata Power gained almost 1% after reporting an improvement on all parameters for their first quarter on a year-on-year basis. Margins at 19% is a big increase, what we saw from about 11.5% in the same quarter last fiscal. Vivek Iyer joins in with the key highlights of that one. Vivek.
Well, an important quarter as far as Tata Power is concerned. Remember, Q1, the company had to navigate various challenges, but despite that, and despite falling coal prices, operationally it was a strong quarter as other segments of Tata Power's business actually came to the fore this time around. Revenues higher by 5%, EBITDA up by 75%, margins at 19.4%, and profitability up by 22.4%. But looking at the finer details, earnings, optically higher, aided by multiple one-off. However, the coal price dip actually impacted the profitability. In fact, the profitability was also aided by an exceptional gain of almost 235 crore from the dilution of company's stake in Tata Projects. Along with that, a favorable CERC order for Maithan Power also led to additional accruals of over 100 crores. And lastly, lower under-recovery from Mundra plant also aided. Key point as far as Tata Power is concerned, profit from JV and associates, it includes the Indonesian coal mines, actually came in at 351 crore versus 803 crore last time. So it's quite commendable given the fact that despite lower coal prices, the company managed to put a stellar show. And again, the stock was one of the top performers in today's trading session.
Vivek, thanks a lot for that. With that, we talk about Pidilite. The results came during market hours. The stock fell about 3% despite reporting an operationally strong quarter. So let's talk about Pidilite itself. I mean, the revenues grew about 5.5% odd. The street was working with a number little more than that. But the internals were rather strong. Gross margins, as you can see, were up by almost 700 basis points. We saw the EBITDA margin expand all the way up from 17.1% to 21.6% as well. So the EBITDA and the net profit were above street expectations, and the consumer business volumes at 12% too were much higher than street anticipation of 8 to 10%. However, increase in the current price of crude and maybe some concerns over demand going forward and valuations kept the stock move in bay, as a result of which it was lower today. Let's talk about some other earnings that came in today as well. Bata India fell after it reported a weak set of first quarter numbers. Remember, the revenues grew just about 12%, and that weighed down on their overall performance as well. The lack of revenue growth, 2% growth in Bata's revenue year on year. We did see the margins contract from both the EBITDA front and the gross margin front, and as a result of which the net profit declined by about 10%. The management did allude to some subdued demand conditions, and at the same time the average selling price increased by 3%, telling you that there was weakness in volumes year on year. With that, let's keep focus on the FMCG sector itself. Nielsen, or NIQ, has now put out a sectoral outlook for the quarter that has just gone by, that is the April to June quarter. Shilpa joins in with the details of that.
Well, NIQ India, which is formerly Nielsen IQ, has in fact said that the quarter gone by was the best quarter in about a year and a half for the FMCG industry. Now, why does it say that? It says the FMCG industry grew about 12.2% in value in the quarter that went by, and this time this was driven by volumes which surpassed price growth after a very long time. Now, FMCG volumes grew about 7.5% in the quarter, which is the highest in about 8 quarters, while the price growth in fact slowed down to about 4.4%, and this is the lowest growth that it has seen in at least 9 quarters so far. Now remember, this is as compared to last quarter. If you see, volumes had grown just about 3.1%, and overall the industry had grown just about 10%. Now rural also is starting to see some recovery. According to the data, volumes were up about 4%, while urban continued the growth momentum. In fact, the growth doubled when you look at from a volume growth standpoint to about 10.2% this quarter. And from a category standpoint, food categories continue to drive growth, and the volume growth came in at about 8.5%, and this was driven by staples and impulse categories. Now, non-food categories also saw some growth. In fact, it was flat last quarter, but this quarter up about 5.5%. This is driven by rural revival and a growth in home categories, but personal care category still continues to decline, especially in the rural areas. Now, NIQ India says that the softening of inflationary rate and a decline in food inflation is good news for the industry, and that the overall drop in price growth has driven some positive consumption impact on consumers when it comes to consumption. But remember, food inflation currently still is a concern, and if you look at the commentary from companies in the past, in the quarter that reported results in the past month, they still say that inflation, while it's tapering off, continues to be at elevated levels, and volumes will still take a few quarters to recover to levels of normalcy. Back to you.
All right, Shilpa, thanks a lot for that. With that, we wrap up on this edition of Markets Today. Thank you so much for watching. Stay tuned to CNBC TV18 for all the news and updates.